Thank you for tuning in to another edition of the Vulcan Report. All right, taking a look now at today's price action. We're going to start off with, let's go with gold. All right, as you know, we've been in a complete runaway market in gold for the past several trading sessions. And then the market decides it wants to sell off. So we have this bearish engulfing candle here where we totally completely contain the last candle's body. The engulfing bearish pattern is bearish, doing an uptrend, which appears to be the case obviously with gold. It then signifies that the momentum may be shifting from the bulls to the bears. If the engulfing bearish pattern occurs during a downtrend, it may be a last engulfing bottom, which indicates a bullish reversal. To test to see if this is the case, if the next candle closes above the bottom of the current candle's real body. So basically, if during the Wednesday trading session, if we get a continuation of this decline, then we know that the top has been put in gold in the near term. Okay, we won't know that until we get another day trading activity. More than likely, more often than not, when you have a situation like this, the next day usually turns into what is called an inside day, and you don't really get that much activity. So we'll wait and see what happens on the gold. But we did decline on the close. We settled down about $16.40. And we, based on the close, we still had an overbought swing VIX reading of 43. Okay, so still way overbought. In addition to that, we have the beginning of a downtrend channel as of the close. As you can see, it's a red bar. The market still has not had any major technical damage, still in a bullish uptrend, still trading above the initial support at the green line there and the secondary support at the red line here, and then another support at the top of the Kumo cloud, and then another support at the bottom of the Kumo cloud. Gold prices could continue to fall even further and even touch the long-term trend line support at 1383.80 and still be considered in a bull market. Okay, so we'll see if we actually start the beginning of a corrective phase. Right now we're still in that bullish accumulation phase, so not a lot to really discuss there, except for we'll wait and see, and we'll trade the next buy signals here. Intraday price projections. Intraday support for Wednesday is at 1581.30, and intraday resistance is at 1612.10. We do anticipate that the 1581.30 will be taken out. Our weekly pulse wave is at 1610.70 on the upside and 1480 on the downside. Excuse me. System would look to add to longs at 1610.70 and would look to actually get short at 1480. Now let's switch over and take a look at the silver market. Silver has not really done a whole lot. It has participated, as you can see, this last bottoming support phase, and then we rallied up into the cloud. Got close to touching the top of the Kumo resistance, but just couldn't bust through it. Now it's selling off as well. Its first line of support is the green line, which I pointed out to you in yesterday's video, and that is at 38.59. And then the red line support is our secondary support, and that is at 37 even. Intraday analysis is as follows. We closed down above $1.54, which is a huge move for silver. We achieved that on the close. And we do also have a bullish engulfing candle, as you see here as well. And we have a swing VIX reading of 38. All right, so it managed to now get below the overbought condition. Technically, if the markets wanted to and had enough bids going into this market, we could actually start to be bid up again and could rally from here easily. Alright, let's see. Downtrend channel is being formed as of the close, you can see. As far as momentum, that has not changed. We still need to get a close outside of the cloud. We need consecutive closes above 41.06 to resume the bull market, or consecutive closes below 36.21 to actually say that the market is bearish again. All right, intraday price projections. We have intraday support is going to come in at around 38.50, and again we expect that to be violated. Resistance is at 40.99. I do not think we will get anywhere near that. Weekly post wave is at 40.88 to the top side and 34.81 to the downside. System would add to longs at 40.88 and would get short at 34.81. Moving along now, let's take a look at the NASDAQ. Yesterday, the stock market was being bid up all day long. We have this monster bullish candle, which Black Ops Trading Room, kudos to you who caught this, who actually took the trading signal that was given on this one. We caught the entire bar, and the system is looking to add to longs on Wednesday as we continue to take out this resistance at 24.18 3/4. We do have a swing VIX reading of 16, which means we have a whole lot of upside to go before we even get anywhere near an overbought condition. The NASDAQ closed up 65.25 points yesterday, up 2.79%. Amazing. We have prices closed higher than they opened, and we had strong bids going into the close, and this is generally considered bullish as prices close significantly higher than they opened. If the candle appears when prices are low, it may be the first sign of a bottom. If it occurs when prices are rebounding off of a support area, the long white candle adds credibility to the support. Similarly, if the candle appears during a breakout above a resistance area, this long candle adds credibility to the breakout. So, in all said, we have now put in a bottom. You can see here, this is a short-term bottom. Okay, we're trading above the Kumo cloud and above the long-term trendline support. So the market is extremely bullish at this point, which we would expect. So, system will be looking to add to longs on Wednesday. Taking a look at some more of the technicals, let's see here. We have intraday price projections. We have 24.14 and about 3/4 on the top side, and 23.35, let's say, and a half on the bottom side. We do anticipate that the 24.14 and 3/4 will be taken out tomorrow as the rally continues. Weekly post wave is at 23.75. We're trading above that, and support at 23.14.5. Obviously, we're above the post wave resistance area at 23.75, so the system is long. And as far as the post wave support at 23.14.5, we do not anticipate that happening, but if it did, the system would reverse and go short at that price area. All right, let's see. Our 12 to 18 month price target for the NASDAQ is at 31.2506 to the top side. All right, let's move along and take a look at the S&P 500. Let's see. All right, S&P 500, as you can see, we managed to get a close outside of the Kumo cloud here on yesterday's price action, which is exactly what you want to see. Again, the system is looking to add to longs on Wednesday. We closed up about 22 points, up 1.69% yesterday. We have a swing VIX reading of -4, which is a little weak, but it is not bearish. It just means that we did get oversold into the support area here, and now the market wants to start moving back up again. Prior to that, we had a swing VIX reading of -3. So the market did put in a lot of upward momentum, and again, we're looking to get long, and we also anticipate that this is the beginning, the first signs of a bull phase, which should equal this last one here. So we anticipate this resistance area up here at 1356.5 to be taken out. Okay. Weekly and intraday price projections are as follows. Intraday resistance at 1325 3/4. We anticipate that the S&P 500 should be able to take that out. And on the support side, we have support at 12.99 even, and we do not anticipate that that will be taken out. Weekly pulse wave is at 1327 3/4, and support 1291 1/4. We do believe that the 1327 3/4 weekly pulse wave will be triggered, and the system will look to get long and add more positions at that price. And again, if the market falls apart and something happens, the system would reverse and get short at the 1291 1/4. All right, moving along, let's take a look at some tricky markets. Let's take a look at the U.S. dollar index. The euro and the U.S. dollar index has been acting really strange of late. We managed to see the dollar hold yesterday, only to fall out of bed in the overnight market. System got short, and because of the sideways action, we went ahead and tightened up the stops, and the system got knocked out of the short trade at break even. I wish we could have held that one, but because of our risk control parameters, we had to obey the system, and it said to tighten up the stop, so we did, and so be it. In the overnight market now, the U.S. dollar index is at hit a low of 75.03, and now is trading at 75.08. And the euro finally got a bid and hit 142.16. So it's now moving. Yesterday, both of these markets, it was just amazing to watch. They literally stood still all day long and did absolutely nothing, as if someone was holding both of these markets back and not allowing them to move up or down. So it was pretty amazing thing to take a look at. But now finally looks like the markets are breaking out. Now the euro is finally catching up to the U.S. stock market, and the dollar is falling apart. And this is day 2 of this downtrend channel here, and we do think that it will just go ahead and just continue to fall out of bed. I think behind the scenes, it is evident that the Fed is propping up the dollar and pumping massive amounts of liquidity into the market. You saw that yesterday. Bonds caught a bid along with equities, which is something that you don't see, and the dollar was holding up as well. And now you're seeing that the bonds are starting to come off, and so is the dollar, and the euro is catching a bid with the U.S. equity market. So interesting to see these things occurring the way they are. But as you can see, we are in a bullish phase, meaning that we're retracing off these lows here, only to top out here, and now we're falling back down to test this first support area. And then here's your secondary long-term support area here. If the U.S. dollar gets below 72, that's curtains, and that will accelerate the economic collapse of the U.S. government. And not long after I first put out the warning that we could go into, that the dollar was going to crash within a 6-week period, now all of a sudden it's mainstream news that we have until August the 2nd until the U.S. Defaults. So anyway, remember, take what you can and give nothing back.